Hello, Theo traders. This is Gianni DePoce, and today is the 18th of June, 2024. A pretty important day for traders. Today is Fibonacci Day, 618. That is the Fibonacci retracement zone, the Fibonacci extension percentage number. It's a pretty important day for traders, like I said, and the markets are reflecting that as we see stocks break out to new all-time highs. Check out the S&P 500. We just rolled over to the September contract, and we are seeing markets make new highs, being driven by the technology trade. If you take a look at the Nasdaq, not really leading today, but the Dow did start to see a bit of a bid yesterday following the contract roll in the Dow futures, which is a good sign because it's been lagging. And the fact that the Dow has not made a new all-time high since March in the futures contract is a bit of a concern, but it is giving us a setup that we've been looking for. Recall that I've been bullish by and large with some reservations in terms of where we are from a cyclical standpoint. And one of the things that I like to see is the Dow peak last. So the fact that the Dow is lagging here with the other indices leading higher is a good sign, but there could come a time where the Nasdaq peaks in the coming months, the Dow continues higher, and it's from that high that I'll be most concerned about a potential pullback for stocks. But underneath the surface, we still are seeing semiconductor stocks and chips lead the way higher. Of course, NVIDIA is hitting new all-time highs, up about 3.8% today. Micron Technology, we shared a swing trade position for members in chat on this stock. We have an upside target of 165. We're getting pretty close to that. And then even yesterday, we shared a new semiconductor stock idea, a breakout trade position on Amkor Technology. We got long yesterday at the close, and this one took immediately up over 9% so far today. It's breaking out to new multi-year highs. This is very bullish price action. And as you can see, as I zoom out here, the stock is at all-time highs. So it doesn't get much more bullish than that in the near term. Let's take a look at some other tech names. I did capture some profits on Veeco Instruments here today. That is looking very strong. So I did sell half. We're going to let the rest of it run, tighten up the stop loss. That's good trade management. And I encourage you to adopt similar principles into your trading style. Other tech names that we've been watching, CrowdStrike, this one continues to consolidate near the highs. Arista Networks, another stock that we have on the books, hitting new all-time highs. So, wherever you look across the board, you're seeing strength in tech. Now, the question is where do we go from here? What other sectors join in on the rally, or is it just going to be a tech-dominated market? Well, let's start off by looking at cryptocurrencies here, because I think there's a lot of alpha potential. There's a big debate being had on FinTwit as to whether Bitcoin's going to drop another, $2,000 to $4,000 from here, or, rally to make new all-time highs. I still think it could go either way. I do like the relative strength we're seeing from some of these crypto related names. Stuff like MicroStrategy holding up pretty well. Coinbase struggling a bit here, but it is off the lows a little bit so far. But I am encouraged by the price action and names like Mara and even Hut 8 Mining, a name that I've warmed up to recently. I don't generally like stocks below $15 per share, but operating a little bit in the gray zone here between $10 and $15 periodically. There are some really nice opportunities to get some inexpensive names in that zone. Another stock that I'm watching very closely here in the coming sessions, Boot Barn Holdings. I've been bullish this stock for quite some time, for a couple months now. It was a classical breakout trade, and I have an upside target of 136 on that, hoping to capture profits and reduce my exposure to this name, and then let really the remainder position run, see how high it can go. There's a lot of contemporary trends and hype related to country western style apparel, music right now. It seems to be in vogue, but even other retail names like Abercrombie and Fitch have been doing pretty well. Gap has been a big leader in that space too. And of course, you have to consider Amazon. I do like the setup here on Amazon as well. The online retailer, I think there's a lot of possibility for another leg higher. And then, of course, eBay. This is another name that an idea we shared with members have been long this stock. And I think the whole online commerce, guys, keep in mind that if the Fed cuts rates, in theory, that should help kind of manage debt loads. I don't think it actually makes it that big of a difference if you do the math on the consumer balance sheet, but we know that perception matters more than reality when it comes to markets. So I would look for this to potentially break out and continue higher. And of course, the big winner following last week's rally has been Apple. Seeing a little bit of a pause on here. I do think there's more upside. What I actually see unfolding here in Apple right now is a bit of a flagging formation. So you had the flagpole established when prices surged over that 2-day period. It's pretty textbook. So I wouldn't be surprised to see Apple spend maybe 2 to 6 weeks going sideways and complete its flag formation before continuing higher towards our upside target in the 260 area. Of course, you have Google, which continues to consolidate near the highs. I like the price action still on this front. And I'm going to pivot a little bit here and look at some material related stocks. Camco, CCJ, I've been a big fan of this stock for a while. Looks like we're trying to complete another higher low. But on that material related front, precious metals, I think, warrant being monitored closely in the coming weeks. I think the weight of the evidence suggests that a low of significance is complete. And if you look at some of the metal mining ETFs, GDX and SIL, you actually are seeing SIL outperform to the upside today. And that's what I like to see in a risk-on precious metals environment. And so I still am long Anglo Gold Ashanti and Agnico Eagle Mines. These have been some staple precious metal names on the books for quite some time. And all the price action we've seen in this space has been constructive, whether you look at El Dorado or WPM, Wheaton Precious Metals, Pan American Silver shaping up to seemingly complete a higher low and then continue its bull trend. I do want to take a look at crude oil real quick because we had a really important development. We took out that high from May today, and this puts me in the camp that perhaps a cycle bottomed a little bit late, and that would be a really good sign. In one stock, I haven't really put out a formal idea on this, but SM Energy, I like it quite a bit. And I think that it could turn out to be a leader. Natural gas has obviously made a big comeback, and there's been some speculation as to whether that's tied into the strength in utilities lately. And, if this all ties into the AI trade, believe it or not, and the increased demand for power to basically fuel artificial intelligence, if you compare the amount of power necessary to run a traditional Google search versus Chat GPT, for example, the difference is astronomical. And so between natural gas, between nuclear, that's why I think CCJ kind of ties into that. Even if you zoom out, look at the broader uranium sector ETF, URA, it looks pretty good from my vantage point. And then, of course, you have to take a look at bonds. We've seen a notable shift seemingly in capital flows, duration leading on the upside, but it's not so much today, but mainly last week. You do see the dollar up against the Japanese yen, kind of flat against the euro here, but the fact that we're seeing bonds bid with some dollar upside does tell me that a flight to safety trade has begun, and they can go on for weeks, if not months. But this is the setup that we've been talking about with respect to equities before a downturn. I wanted to see stocks, bonds, and the dollar all rally together as global capital seeks refuge in dollar-denominated assets. This ultimately sets us up for the world to start selling off before the U.S. does, and eventually the U.S. will turn lower. Could coincide with Fed rate cuts this year. But remember, just because the Fed's cutting rates doesn't mean that everything is rainbows and butterflies and inflation is defeated. You also have to address the possibility that the economy is slowing down. Might try to hold it off until the election, but if the economy is slowing down, interest rates will come down. That explains the bond bid, that explains the flight to safety in the dollar, and that explains tech doing well as well, because when rates come down, tech does good. So that's the conundrum that we're facing with as analysts and market operators. But that's all that I wanted to cover with you today. Thank you so much for watching, and I hope to see you in the TheoTRADE chat room.